Is it time to sell your U.S. stocks? Is this the last hurrah, as Michael Burry suggests? Well, first, July was a fantastic month for U.S. stocks, posting the best month since 2020. You saw some sizable gains in July, and you look at how let's say the S&P 500 has performed year to date, at one point down around 23%, since recovering mostly in July a lot of those losses, recovering about half of those losses. And I can't help but wonder, is this a bear market rally? What does Michael Burry think? And I think part of the reason why stocks have rallied so significantly is tied to the Federal Reserve, where a lot of folks said, yeah, that was peak Fed hawkishness. Now, let me elaborate what that means. So effectively, a lot of folks were concerned the Federal Reserve is going to crash this economy. That's the concern. But at this meeting, they said, yeah, we think 2.5%. That's sort of the natural rate for the economy. So above that means we're going to sort of contract the economy. Below that, and it juices the economy. That problem with this thinking is that Jerome Powell's been saying this for years when inflation back was around 2%. So does it really make sense to say, oh yeah, interest rate policy, that natural rate that doesn't either hinder or help the economy, really doesn't change that much? And so a lot of folks say, well, wait a second, this is just baloney for him to say, oh yeah, we're gonna effectively go a little bit slower. Yeah, we're still going to tackle inflation, but to not have that same sort of pressure, like we need to crush inflation now, which is prior meetings, that the tone was a little different at this latest meeting. And that's causing a lot of folks to say, rah, rah, he's not going to crush the economy. Won't this be wonderful for stocks? And well, we'll see about that. I mean, a lot of folks are saying, yeah, he's just doling out the happy pills. But one person who's not taking them is Michael Burry, talking about how the latest earnings reports, and by Jove, the whole season, have a last hurrah feel. Meaning like, yeah, this could be it. And then you're going to see the downturn. And you are starting to see that with some earnings reports, some restaurants seeing a cutback in spending, particularly with lower income Americans like Chipotle and McDonald's, saying poor consumers are cutting back. Really, were the value menus getting a pickup, but everything else, yeah, you're just not seeing people going all in for their chicken nuggets. They want the 6-pack versus the 12-pack or something. Michael Burry further commented about how the New York Times front page the day after the Dow bottomed in 1974 doesn't mention stocks which were down 45% since the January 1973 peak. Mentioned, however, was the Fed cutting rates to 7.75%, signaling a credit ease. This is a really important point. Stocks rallied 53% in 6 months, making a lasting top on that killer mistake. There's a lot here, a lot to think about from this. So first of all, Fed policy is such a key element of how the markets react, because here it is in 1974. And part of the reason why you had 1970s that had this sort of prolonged inflation is because they didn't fully tackle it when they should have. And he's calling out this point, saying, yeah, they were easing. This credit easing in 1974 led to this killer mistake, this top that lasted for a while. So you got this pronounced rally because the Federal Reserve was all of a sudden easing, which, previously they were tightening, and that's why the market fell about 50%. So it's one, so important to track the Fed. Two is, how serious will they be about breaking the back of inflation? Because if they're not, and they don't go all in on breaking the back of inflation, you could get another scenario like what you saw with the 1970s, where U.S. stocks just languished for years and years. All the while, inflation just keeps going because it never got crushed in the first place. And that is the tough medicine that we're going to see whether or not Jerome Powell is going to be willing to dish out in the quarters and months ahead. He also talked about, so Michael Burry is clearly very skeptical about this rally, talking about how someone was going on about Christmas in July. Hope you enjoyed it. In other words, yeah, the good things that folks are expecting for Christmas, that just happened with this monster rally, or this, significant rally with the S&P 500 and major U.S. indices in the last few weeks in July, where July was a very strong month. He's saying, this is it, folks. Like, don't be counting on this don't expect the U.S. markets to make new highs. That's what he's effectively saying. Like, that's at least my read through it. If you have a different take, I'd love to hear it. So the question is, where does stock market, let's say, go from here? What are my personal thoughts? First, if you're looking for compelling investment ideas or want to take charge of your investment journey, consider unrivaledinvesting.com. I talk all about sort of the perks of unrivaledinvesting.com in the description of this video. I look at the investment landscape right now, and I have a lot of different thoughts. I think it sort of reminds me of these sort of weird multi-shaped dice where it's like there's just a lot of weird outcomes, and particularly a lot of not great outcomes. First, look at some of the key fundamentals of the macro. You got higher oil, you got higher interest rates, you got the higher US dollar. That does not help corporate earnings. So I look at that, that's a headwind. I look at, Nancy Pelosi visiting Taiwan. Who the heck knows if that's going to result in a huge geopolitical, conflagration. I look at this as a huge potential problem. It scares the EBGBs out of me. Like I'm just like, ugh, I really hope this does not blow up. I don't understand why Nancy Pelosi's going there. I think it's all downside and not a whole lot of upside. And it's just strikes me as incredible risk. And also, if it results in some sort of tit for tat or some military reaction from China, does that result in, let's say, less trade with China, in which case the U.S. actually has to manufacture more things, but generally the U.S. cost of manufacturing is much higher, in which case inflation actually gets worse for the average U.S. consumer, in which case this whole process spirals again, where the Federal Reserve then has to raise rates even more. So I look at all these different data points. I also look at valuations. I don't think valuations are dirt cheap yet. I look at a lot of things. I'm like, yeah, there's a lot of unprofitable tech stocks that have sold off 70-80%. But I look at the cash cows, and a lot of them still trade at 30-40 times earnings. And I'm like, not crazy compelling. I think another core aspect is that you are seeing data points that the periphery is looking at economic contraction. I mean, look, even US GDP, 2 quarters of real economic contraction, partly because inflation is so high, because, hey, the economy is growing at 7%, but, inflation's 9%. So really we're contracting at 2%. So I look at this and I'm like, no matter what anyone calls it, that, that's traditionally the metric that a lot of folks looked at it. And that really isn't being priced in, I'd argue, with the market. I mean, the S&P 500 is still around 20 times earnings, not crazy cheap. And, a lot of folks like to think, well, Daniel, isn't this you just trying to time the bottom? That's not what I'm trying to do. What I'm trying to say is when I look at stocks and I go one by one for every stock, it's not just sizing up, is this a great company? Because that is the first filter of like, are you unrivaled? Do you have this great trajectory in the years ahead? That is clearly important. But another aspect is like, hey, am I going to get paid? Like, is the valuation worthwhile? And so that's a key component that I look at, saying like, yeah, is the risk reward compelling? Am I getting paid to hold it? And that's arguably a big component of investing, is saying, hey, if I'm buying shares, I'm effectively providing supply of capital in this market. Is there, a need for this supply? If there's no need for it, things just, prices are just out of whack and you're going to get low returns. And so I'm looking at a lot of these things and I'm saying, yeah, I'm still not being crazy compensated. I want like 30% plus returns for some of these things. Like when I put my last dollar to work, I want incredible bargains. That is not trying to bottom tick the market. That's not it. Like if I buy and I'm like, man, this stuff is going to compound at 20 to 30% for years, that is not bottom the market, because the market can then keep on going down. And I would be fine with that if I was like, yeah, I'm conservatively underwriting this. And I still think, that based on their cash flows, this profitability, this growth, the returns to shareholders, I can pencil out an attractive return for my own personal investing. And that's what I'd consider, in terms of that last dollar. How am I going to spend it? And lastly, a lot of investors are sort of losing sight of the fact Federal Reserve has not pivoted. Like a lot of folks are saying, oh yeah, peak hawkishness. Federal Reserve has not pivoted. They are still like, oh yeah, we're going to stop inflation because we have to. Like you hear Jerome Powell say that over and over again. The Federal Reserve is still tightening. Their tone might have changed, but I don't think you're going to see like them just pause and be like, oh yeah, we're not going to tighten next month. Like this is still the process of putting the screws to the economy. And I think you're going to see that pressure ultimately translate to a greater contraction and ultimately higher unemployment. So I look at this and think, if those things play out, indeed, you could see much, much lower stock prices, much, much lower valuations as well. Ultimately, earnings power could also come under pressure. Also, keep in mind, none of this is financial advice. I'm just sharing my personal take. If you enjoyed this video, sharing some of the key points that Michael Burry has recently shared, as well as my own, please make a point of hitting that thumbs up, hit that subscribe, and thank you so much for watching Unrivaled Investing.